All right, joining us now to look at the commodities market space is the head of research at financial derivatives company, Damilola Akimbami. Hi, Dami.
Good morning.
Good to
Good
see
morning.
you
Good morning.
again.
Great to have you.
So one major talking point after the MPC is the issue of the exchange rate, with the central bank governor still insisting that the bank is just still doing the managed floating of the exchange rate system after adopting the NAFEX rate as official rate. What's your take there?
Oh, well, like the CBN governor said, what Nigeria has been practicing right now is a managed floating rate. And we've come from a fixed auction where we're having the wholesale Dutch auction, the retail auction, and then we've moved to where we are right now, that we have the IEFX and now the NAFEX, which the CBN has adopted. And if you even look at what happened yesterday at the parallel market, we saw that there was a sharp depreciation to about 493 naira to $1. So what we are seeing right now is that speculators are taking advantage of the fact that the CBN has devalued the currency. And
because that's what everybody is saying.
Yes.
The central bank has devalued the currency. But
Yes.
you know what? The central bank governor would always insist that, I mean, you don't benchmark the exchange rate based on the parallel market. But interestingly, that is the market where, I mean, an average Nigerian goes to get.
So it's because, again, of the forex scarcity issue. So what we're seeing right now is just speculators taking advantage of what is going on, and we expect the CBN to increase supply. And if you even look at what happened at the I&E window yesterday, supply, the turnover increased by over 260%. And despite that, we still saw that depreciation in the power market. Meanwhile, both the IEFX and the NAFEX rates appreciated yesterday. So I think what is going on is a short-term effect, and it's going to be like what we call in economics the cobweb theory, where prices, the exchange rate keeps moving around until it gets to its fair value. Because currently, right now, the naira is overvalued by about 23%, and we believe that as the CBN increases its supply in the interbank market, we're going to see that convergence occur. And bear in mind, convergence doesn't necessarily mean an appreciation or a depreciation. It just means that the spread between the exchange rates has reduced.
So we can't call it devaluation then?
Well, the fact that the CBN is no longer using 379, is now using 410 as the official rate, so that is technically a devaluation. But like I said, what we saw in the power market is just short-term, and now, even before the CBN officially removed that 379 from its website and adopted 410, we already knew that most transactions were actually conducted at the I&E window. So it's just making it official what we already know. And most manufacturers even are not even using that 411 because of forex scarcity.
Yeah,
so there's
they
a
had
blended
already priced
rate.
it
Yes,
in.
they priced it in. And again, if they can't meet all of their demand from the CBN, they will look for other sources. So at the end of the day, most manufacturers are using maybe a rate of about 450, 460 to $1.
You did talk about, speculators actually hoarding.
Yes.
If they carry on like this, what can we expect in the market?
So I don't think it's going to take, it's going to persist for long. Like I said, it's a short-term thing, and that's why we call it the cobweb theory. So price keeps moving around, and it's unlikely because, again, there's a limited amount of funds in the market. Bear in mind that as the naira weakens against the dollar, you can't buy as much using the same. You can't buy as much dollars with the same quantity of naira. So in that, what I'm trying to say is that, for instance, if you could get maybe $1,000 at the price of 379, now that it has moved, you can't get that same amount of dollars unless if you increase your naira. And that's why we've even seen, even in the money markets, liquidity has been tight, and we've seen interest rates also increase. So the CBN could also use its exchange rate to manage the liquidity in the system. So I think this is a short-term phenomena, and we're going to see rates appreciate slowly in the parallel market.
So what are the likely implications now, looking at the commodities market space now? What are the likely implications of this move?
Yes. So first of all, the market has already priced it in, and like I said earlier, a lot of manufacturers were already using rates as high as 450, 460. And so commodity prices, especially those that are being imported, so global food prices, when we know are high, and we're seeing inflation increase in global economies, and we know also that domestic commodity prices as a result are also increasing. One, because of global food prices are increasing. Two, because of the exchange rate impact. So that will continue to feed into imported inflation. Also, the planting season effect is there. Insecurity too is there. So a lot of commodities, the prices are elevated right now, and that trend is going to continue. And again, the rains have not even been as much as one would expect for the month of May, and that would affect whatever harvest we're going to have. So let's assume on a typical year with abundant rainfall and what have you, you expect to get a robust harvest. But because, one, the rains have not been sufficient, look at what is happening in cocoa, or to cocoa rather, in the southwest region, as in it's going to affect the mid-crop and the main crop for the 2020-2021 season. That, coupled with the fact that a lot of farmers, because of the insecurity, can't even go to their farmlands to plant. So output levels are definitely going to be affected, and you see that play out in the crop production numbers for Q2 and Q3 2021.
Yeah, but of course we saw that the April inflation declined a little bit. Are we likely to see that trajectory, going forward with all of these issues? Now we're seeing, of course, call it devaluation, call it managed exchange rate,
call it whatever.
Or whatever, exactly. And then we have the insecurity issue, and then we have the planting season and all of that. So is it possible that perhaps the May inflation is still going to decline? Are we going to see that declining trajectory?
Like what I like to say is, what I like to tell people is that, first of all, inflation is a year-on-year analysis. So you are comparing food prices now with what they were last month. So the fact that April inflation slowed to 18.2, what we're saying is that it just increased at a slower pace, not necessarily that food prices have declined. And as long as the fundamentals are still the same, and by that I mean the insecurity goes unabated, planting season effect, imported inflation, the exchange rate and forex scarcity, food prices are going to remain at current levels. I was talking about it on Tuesday with Ini and Ladi that, look, tomato and pepper, the prices are going to increase come May, come June. So I think in the next couple of months, May inflation numbers are going to, if at all, that decline that we saw in April, I think is more like a blip and not a trend that we're going to see. And we should see food prices continue to inch up.
Okay, so I saw on your slide that the FPI, declined. What's pushing that?
Well, first of all, foreign portfolio investment is basically investment in securities and other financial assets, so the likes of equities, bonds, money market instruments, and they're what we call hot money because they come easily and they leave also as quickly. So the slightest trace of uncertainty, the slightest trace of insecurity, and we know that these are some of the factors that play in the Nigerian economy. There's so much insecurity, policy uncertainty, there's tight regulation also, so investors are unsure of what is going to happen next in terms of the policy
even the liquidity
and environment.
Problem
there's the liquidity problem,
market,
so there's a backlog, and that has contributed to the decline in FPIs. Also, the COVID impact too, we need to mention that. And even what the CBN is trying to do right now, we know that sometime in 2019, the CBN had prevented foreign portfolio investors from participating in the open market operations instruments. But now, in March, the CBN has allowed foreign investors to participate in the market, basically just to try and increase the forex inflows, because again, forex scarcity is a major issue. So we believe that with this that is now being in play, we should start to see an improvement. But again, the fact that there's still that backlog, a lot of foreign investors are yet to repatriate the funds, so they might be unwilling to come into the market now until they see a clear sense. But fine, the CBN has done some things. They start convergence, and also adopting some of the requirements that all these multilateral agencies have put in place. So I believe that should help in the medium term.
And what would that mean for commodities markets?
Yes, so for commodity markets, again, as long as we're still in planting season, prices are going to remain elevated. But if the forex inflows improve, then the CBN has the CBN's ability to intervene in the market increases, and then we see an increase in supply. That should help the naira stabilize, and we should see further convergence, and possibly we could see the naira stabilize around, let's say, 411, 415, if that happens. If that happens.
All right, we've also seen the oil share index on the NGX continue to, decline.
Yes.
With commodities-dependent companies also losing, what's the implication of this?
Yes, so obviously commodity-dependent companies are feeling the brunt of what is happening to food prices. And if you even look at the likes of Nestle, Cadbury, Honeywell, all of them, their year-to-date prices, they're all in the negative because of what is happening. And most of them are also struggling to meet their forex needs. They also have to consider, okay, can we pass this increase in costs to our consumers? consumers, or do we have to bear the brunt of it, or do we have to maybe miniaturize and reduce the quantity of what we're producing so that we don't have to necessarily increase the price? So these companies are struggling. Most of them are struggling also with the issue of power. Some of them have their own independent power plants, but then again, access to power is a major issue. So that is what is at play and is also contributing to the decline in the stock market.
All right. Also, the NNPC just signed a $10 billion Bonga Field investment deal. What would this mean for Nigeria's oil and gas sector?
Well, this, first of all, it's a good thing because at least that just shows that the NNPC and its partners, the likes of Shell and co, they've been able to address some of the lingering issues and disputes over the petroleum sharing contracts. So that is a good thing because at least it's also going to bring about $10 billion worth of investment. And when we're talking about FPIs, that I said that they are called hot money and they easily, as they come in, they also get easily, and they also leave the economy. Yes, the capital flight. FDIs are actually more dependent because they stay longer. But bear in mind that also Shell on one hand, yes, has signed this, but Shell is also divesting some of its onshore, in fact, all of its onshore assets, not just Shell, Total, ExxonMobil, some of these IOCs are also divesting their assets because of because of insecurity, the pipeline vandalism. So it's on one hand, yes, so to an extent, we are getting more from the FDI, but more importantly, as long as those issues are yet to be addressed, we might start to see a lot of our investors pull out from the system, and it says a lot about the perception foreign investors have about the economy.
And other economies are actually switching to cleaner energy at this time, so where are we in that,
In fact, so Shell, one of the reasons they gave for the divestment is because they're saying that they're switching to their net zero carbon emission by 2050. So Nigeria also has to position itself because that's where the whole world is moving towards, to clean energy, alternative energy. So, and that just says that oil is gradually becoming obsolete.
In other words, we shouldn't be talking about oil.
Well, Nigeria is going to continue to talk about oil until it has another alternative. Yes, but we're taking the steps.
We should be planning now.
Baby steps. Those steps are not huge enough, but like you rightly said, we have to start planning. We can't wait until oil is totally obsolete and we find ourselves in the north. Yes.
Exactly.
Well, in any case, oil prices trending up despite weak demand from Asia and India. So what's your medium to long-term outlook?
Medium to long-term, I think like in this world of commodities with how volatile things are, I think that is a long-term. But what we are seeing right now is that oil prices, I think, are going to continue to trade around current levels. If they touch $70, well, maybe bear in mind that there's Iran's supply that we need to consider. And we're also seeing a gradual recovery in the US, in Europe, in China, and these are major oil consumers. So I think at the end of the day, oil prices are going to balance out. There's a meeting June 1, and they're going to be considering whether they should extend the output, the increase in production, quotas, or leave things the way they are because of Iran's oil, which will be about 2.2 million barrels per day. So I think oil prices will stay around this level, and the market would balance out to find its equilibrium.
All right, let's look at the domestic commodity prices. Take us through the drivers in that market.
Yes, the drivers are the same. planting season, insecurity. So I think we've talked about them over and over and over again, and we're going to continue to see that's still on the uptrend. So inflation dipped in April. Food prices are not coming down. Ladies, go and stock up your house. Yes.
Yeah, someone was telling me, I think that was yesterday, say, oh, have you bought your tomato?
Yes.
Oh, from June.
Yes,
I mean,
exactly.
It's going to be very expensive.
Yes. So it's better to buy it now, which at around 20,000, because it might increase further. So stock up.
Stock up.
So,
stock up.
Laddie,
stock up.
I guess we'll have to do that.
Yes, after the show, I'll go and stock up.
Okay, thank you very much, Dami,
for
sharing your time
so much
with us.
Thank you.
Okay. We take a moment. We'll be back.